I noticed the bot thing. That's interesting. I sat there watching it for a little while. Yeah, and the orders come in here and then they disappear and then they come in
Yeah,
here and then they disappear, right? So I
yeah.
thought that was super cool.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey Walter, let's talk about crypto. I heard you've been trading quite a bit of crypto recently, so maybe I thought we could compare crypto to like Forex or stocks and the upsides, downsides, maybe differences in psychology, stuff like that.
Okay, so I just had a trade get stopped out last night on Bitcoin while I was sleeping. So yeah, it doesn't happen all that often. The losers are like 33% or whatever. But okay, so if you're coming from the like MetaTrader world, where you're used to like MetaTrader 4 and stuff like that, you are going to notice when you go to crypto, if you go to like a crypto broker, a couple of things. One is that you're going to get a lot less leverage. So you're not going to get 20 to 1 or 30 to 1. Usually best you can get is around 10 to 1. And two, you're going to see a completely different platform because you're going to see the order flow. So you're going to see where the orders are, which is actually really useful. Especially, okay, here's a good example. If you're trading a very illiquid pair or a liquid crypto, like let's say one that does between $8,000 to $15,000 a day, okay, which I do spend a lot of time in one of these pairs, and you can see where the orders are, you know exactly where the pressure is. Do you know what I
Hmm.
mean?
Hmm.
So like if you see a whole bunch of orders to sell, like let's say, okay, I'll give you an example. So this is happening right now. So there's like an order for like 120 coins to sell, 50 to sell, 60 to sell, and 11 to sell. And they're all the top, they're all the ones that are closest to the market price, right? And the market price is kind of the between the cheapest sell order and the most expensive buy order, right? And then on the buy side, you see these orders for like 11, 9, 19, and 12. And they're all, you know what I mean? Well, you see what's going on, right? The
Hmm.
sellers really want to dump, and the buyers, they're not, do you know what I mean? They're not really at market right now. So that tells you you're probably going to see some action to the downside, like price is going to go down, right? So that's, you know what I mean? And and the opposite is true as well. If you see a bunch of buy orders in there where it's like 200, 250 coins, 100 coins, 12 coins, 25 coins, then you look on the sell side, you see someone's going to sell 11, someone's going to sell 7, someone's going to sell 17. Like that, you're like, okay, the buyers are really keen and they've got huge orders here. And so, do you know what I mean? It's
Hmm.
interesting to see that. And the other thing though is you can hide it. They run bots that will get really close to the market and then pull it away,
Hmm.
and because they want to make it look like, you know what I mean, there's a big fat pile of orders there but waiting to be hit, and then whoop, take it away real quick. So that happens too. And on the platforms, the crypto platforms, you can actually hide your stop, so you don't want them to know where it is until price gets close to it, and then it'll put your order in.
Hmm.
So I'll give you an example. So let's say you buy Bitcoin at 31,200 and you have your stop loss down at 31,000, right? Well, you might have it set in the platform where your stop at 31,000 doesn't go in until it gets to like 31,050, right? And then once it hits that, then it'll put it in, but it's at market, so you might get slipped, okay? That's pretty common too, that if the market's moving really quickly, you're going to get slipped, or it won't hit your order, and then you wake up and you go, oh, I got stopped out of 80% of my trade, but I'm still holding on to 20%.
Hmm.
So you got to like manually exit it, right? So
Hmm.
it's like a real market in that way, and it's not where you're dealing with your broker or your ECN or whatever they call it, all that funny business. So it's very different in that way, right? It's very different in that way. And like, how in Forex you can earn swap. Well, you can do the same thing, as you know. I mean, I know I'm telling you stuff, like in crypto, you can basically stake your coins and get
Hmm.
a percentage or whatever. Like I've done that with some for like about a year or whatever, year and a half or whatever. And it's, and it grows your but the thing is you have to leave them on the on the exchange usually. There are some ways that you can leave it. You can have them technically in your wallet and then stake, but those are the exception, not the rule. So usually, normally you have to leave it on an exchange, which is there's all kinds of problems with that, of course. So yeah, so it's really interesting for traders though. From a trading side, you have a lot of elements that you have in normal trading. You just don't have the leverage, and then you can kind of see the market. So that's really useful for people who are used to like futures or whatever, and they like if they do like tape reading or whatever, where they do like scalping and stuff like that. That's kind of useful that way. It's extremely interesting to me on the very low volume illiquid markets because it kind of happens in slow motion. Whereas if you're trading like Bitcoin or whatever, it's like super fast and you see the orders changing all the time and all that. It's like kind of crazy. But on the illiquid ones, it's like, okay, I know where this is headed, right? You can see, do you know what I mean? Bots aside, you can see kind of where the pressure is if the price is going to come down or go up. Yeah, it's really interesting.
Yeah, it is. It's almost a little purer way of trading, I guess, like a level 2 type stock thing, right?
Yeah, exactly. Yeah, exactly. If you're used to stocks, it's exactly. Yeah.
Yeah. I noticed the bot thing. That's interesting. I sat there watching it for a little while. Yeah, and the orders come in here and then they disappear and then they come in here and then they disappear, right? So I thought that was super cool. Yeah, but in terms of like tradable liquid or tradable pairs, I mean, from what I've seen, probably Bitcoin, Litecoin, Ethereum. But Ripple. Outside of that, there's a very good chance you get slipped, right? Is that your experience also?
Yeah. So I don't even like because my core crypto strategy is like on the 5-minute charts, although it's very aggressive targets and very wide stops. So it's really more like trading maybe like the, I don't know, 1 hour charts or something. It's probably more akin to what people be used to on like the 1 hour. I can't trade a brokers unless they have a really tight spread. So if you're trading like through a market maker, you have to have a really tight spread. And if you're trading like through a regular crypto broker, you just need a lot of volume at that broker, right? Which basically will tighten the spread. Same effect. So, for example, there's a platform that I use that I can't trade Litecoin on because the spread is 20 cents, but I can trade because some of my targets might be like 80 cents, right? So you can't take away 25% of my target. So, but then on Bitcoin, it's 10 cents, which you would think it would be the opposite, right?
Yeah.
You'd think, but no. So I can trade my system on Bitcoin, no problem, because that has a brilliant spread at 10 cents on Bitcoin. Bitcoin right now is around 31,000, right, or 30,900, something like that. So yeah, 10 cents is no problem, but Litecoin is terrible. Litecoin is, I don't know what it's at now, if it's like 100 or 99 or something, 98. I don't know what it is, but yeah. So the point is, you just got to pick them. Yeah, I think it's exactly what you said. Like if you're going to trade, a lot of people like to trade XRP, and then Bitcoin and Litecoin, Ether, just like the top 5 or 10. And what you'll notice if you look it up, you'll notice certain brokers kind of specialize or have a lot of volume in certain pairs. So some people trade like Bitcoin against Ether, right, or whatever. So there's lots of different pairs you can trade, and you want to pick the broker that you know is going to have the volume for you, right? If you're gonna be in and out, just need to have one that has enough, probably hundreds of thousands of depending on the currency, the crypto, probably at least hundreds of thousands, if not millions, through that broker every day. So you can have a tight spread, get out and, get out. No problem. That sort of thing. Yeah.
What are your thoughts on shorting? Is it been easy to short?
Yeah, it's not a problem. So like what the pair that I trade is against the USDT, so that's Tether. So it depends on the platform. Sometimes you'll get paid in, like, if I'm trading Litecoin against USDT and I win that short, that sell trade, then I'll get paid in USDT. Does that make sense? So then but I want to keep everything Litecoin. I don't want USDT. So then when it's low, when Litecoin is low, I'll convert that USDT into Litecoin. Do you know what I mean? So yeah, and if you buy against that, then you get paid in Litecoin, right? So you just kind of have to, so you just kind of have to manage that. So what I usually do is if I'm sitting on a little bit of USDT, I will wait until my system says to sell, right? And then when it goes down a bit, then I'll convert it to Litecoin, right? Like that's how I do. And you do the same thing with Bitcoin. There are ways that you can margin. So like I said, I'm trading 10 to 1, but there are ways if I have 100 Litecoin, it'll let me trade 1,000 Litecoin, right?
Mhm.
In the platform. And there are ways that you can trade. They'll calculate the margin based on USDT or Litecoin, basically on your preference. Do you know what I mean?
Mm.
It's not that complicated. I'm making it more complicated than it is, but it's pretty cool, man. Like it's really cool, like seeing and like kind of timing it, and like you can see where the orders are, and you want to buy, but you think it might dip, so you kind of get in at a good price and all that kind
Yeah.
of sort of stuff. It's kind
Yeah.
of fun. I kind of like it. It's very different to just putting in a trade in MetaTrader and just bloop, or an order or whatever, and just what I mean. It's very different, and it's still the same emotions though. Like you get really bummed out when you miss out on a trade. Like
Mm.
it happens all the time where like I'll have like a buy trade and I'll go, oh, it'll dip 10 cents here. I'll get in here on Litecoin, for example, and it never gets to my order, and it just rockets off to the profit target and beyond without me. I'm like, so it's the same stuff that you go through in any other market, but yeah, it's interesting.
Yeah. Have you traded with any like traditional Forex brokers who do crypto? Or is it strictly like crypto
uh
exchanges?
I have, but I don't really like them. I actually have one account now that is a really weird platform where they actually say it's a custom platform. They said that they pull liquidity from the crypto exchanges, like
Mm.
crypto brokers. So it's like a platform that kind of looks like MetaTrader, sort of,
Mm.
but and so you can trade Forex and all that. But the reason why they have tight spreads on crypto is because they're pulling liquidity from somewhere else for that. You know what I mean? So
Mm.
yeah, so that's the only one I do, because the MetaTrader ones, just the spreads are too wide for me. I don't like it.
Yeah.
I found them to be really bad. Whereas it's really cool on the crypto platforms, like KuCoin is one that people use, or OKX, or there's tons of them out there. You can look them up. But they're all pretty similar. It's almost like kind of like MetaTrader, like somebody created the platform and everyone's sort of using it. It kind of
Yeah.
seems that way,
Yeah. Yeah.
and I wouldn't necessarily want to trade on a MT4, or I don't know. I don't really trade MT5, so I can't say, but I think once you go on to one of those platforms, it's just kind of refreshing. You know what
Mm.
I mean? Like knowing that it was like the real market that pushed it down there, to
Mm.
that price. If you get stopped out, you get stopped out, right? Whatever.
Yeah.
It's not like some broker funny business or something where they widen the spread, or do you know what I mean? So
Mhm.
but the slippage is real. Like the slippage
Oh yeah.
happens quite often.
Yeah.
Like you have to,
Yeah.
do you know what I mean? Like you have to deal with that. So that's the tricky bit. Yeah.
Yeah. I noticed too that with the MT4 brokers, like the swap is unreal. Like the swap is negative, huge negative in both directions. So like I do a lot of hedging, and if you're gonna, I tell people you can't hedge with those platforms, because where the euro would be maybe like plus 3% on one side, -9 on the other, you got like -25 on both sides on like Bitcoin, Litecoin, and everything. So I think that's something
Yeah.
important to take a look at. Yeah, you can hedge with crypto, but you're going to get eaten alive by the spread most of the time, unless you find a broker that has lower swaps. But I mean, not, yeah, eaten alive by the swaps. But
Yeah.
yeah, that's something to consider also.
Yeah, you're absolutely right. That's a big deal. I would be very careful there, because you're gonna yeah, if you're holding that trade for a while on an MT4 broker, those swaps are killer. They're just killer. And you do pay if you're trading with a crypto broker and it's a leveraged account, you do pay for the like for the loan, so to speak. Um, so there is that to consider. You know what I mean? And I usually will add a little bit to my profit target. So instead of, like, for example, having a 1-to-1 reward to risk, I usually have like a 1.03 or 1.04 around there,
Mhm.
and that in my mind covers the you know what I mean? It covers the issue with because they charge you that leverage. They charge you to lever you up 10 to 1. So, but it's nothing like the swap that you would pay at MetaTrader, right? It's not,
Oh
you know
yeah.
what I mean? It's
Okay.
not even that close. Yeah.
Yeah, yeah.
So it's a pretty
Okay.
good deal, actually. Yeah.
Okay,
Yeah.
cool. Well, I'll look into that. I've never, I only
Yeah.
do like long-term stuff with crypto, so I've never
Yeah.
looked at the short-term stuff. But
Yeah.
yeah.
You can't. Yeah, you can totally, and that's the thing. Like, you could trade spot, you could trade completely unlevered if you want. If you're, do you know what I mean? Like, if you're holding on, I think Bitcoin's going to go to 70,000. So that's going to double your money from where we're at right now, right? So you'd be like, okay, you could do it unlevered. Unlevered. You're not paying anything really. It's just, like that's how Warren Buffett trades, right? I remember when I came to Australia, Warren Buffett was in an Australian dollar trade, right? So we were both in the trade, and then like, I was just doing it by the fact of moving my life down to Australia, but he just moved his USD into AUD and just like held it for like 2.5 years or whatever. Yeah, you could totally do that too in crypto. Like, I know people who do that. They're like, no, I'm not gonna do that. I'm just gonna, position, and like I think it's gonna go up for the next 6 months. So it's a spot trade, which is super simple, pretty cool stuff. Yeah.
Yeah. Okay, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.